Welcome to January 2022 ScaleUp Mastermind. Can you believe it's already January 2022? I can't. But welcome to the ScaleUp Mastermind training. We have a number of different resources available for beginning entrepreneurs and established entrepreneurs. Many of those include ongoing coaching, mentorship, if you need help writing out your business plan, or if you need help getting connected with government contracts, helping write out government contracts and sending those over. We can connect you with our Washington PTAC organization. We can also help you get connected with business coaches and the ScaleUp mentorship through the ScaleUp alumni program. Tonight, we'll be talking with LaVonne Shields, a strategic accountant, who will be talking to us a little bit about some of the pitfalls that businesses face and what you can do about them. So without further ado, I'd like to turn it over to LaVonne Shields.
Awesome. Thank you so much. And let me go ahead and share my screen and make sure I'm sharing the right one, because you ever been on a presentation where they're sharing the summary screen and you're no, you're sharing the wrong one. So this is my presentation what pops up. Is that what you guys see?
Yes, we can see it.
Awesome sauce. Thank you very much. So as I said, my name is LaVonne Shields. I'm the accounting strategist, and this is making sense of your dollars so that your dollars make sense. A little bit about me. My intention is always to make sure I provide information that's helpful, that allows my participants to be able to build, lead, and grow their businesses so they can fulfill their purpose and leave a legacy for future generations. That's always my objective. So my goal tonight is to make sure that that's there. FYI, I'm not a presenter. I'm a communicator, a conversationalist. So please feel free to unmute. I will have the chat up if you're not able to unmute. And I'm pretty sure James will keep track of it as well for me. But I like engagement. It kind of lets me know that you're not just staring at me and I'm not freaking you out and kind of things like that. So please feel free to engage. A little bit more about me. I started managing money at the age of 9. I like to call it legal crack sales. I was a Girl Scout and we sold cookies. And so it started with, me selling cookies. My dad took me to the troop, and instead of us just buying what we needed to sell, he actually bought like three cases. And so we met our fundraising requirement, and he turned to me, he said, whatever you sell, you get to keep the cash. And that was very fascinating to me. And I just knew at that point that managing money and the power that came behind that was going to be my purpose, and to do that in any way possible. So I did get a degree in accounting. I'm a registered tax preparer, and I'm a QuickBooks Pro advisor. Been using the software for many, 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 many years. However, interestingly enough, this particular workshop was created after I had been a QuickBooks instructor for our local women's business center for a couple of years. I realized the questions that people were asking wasn't so much about the software. It was about what was happening in the background, and then that's how Dollars and Cents was birthed. That's how we got here. So one of my favorite quotes is from one of my favorite books on business, which is The E-Myth. And it says, most small businesses are started by a technician having an entrepreneurial seizure. So what does that mean? That means that, we usually launch our businesses because we know how to do something that can generate income. And the reality is the generation of income is technically the easiest part about being in business. In all honesty, anybody can make a sale. That's not the hard part. At the size of the scale, all those might fluctuate, but the ability to get someone to literally buy into your vision usually isn't the hard part. It's the managing of the business of what you're selling that usually trips people up. It's that transition from a technician to a CEO, which was where a lot of business owners make that kind of tumble. So the most important law of business is that it's a game. I have 3 sons, 5 nephews. They all stair step. We laugh whenever we get together. Like, somebody should have stopped before we got to 8, but we got 8 total. Plus we did years in youth sports. And after being a team mom and sitting on the sidelines and being their biggest fan, I saw there was such an amazing correlation between business and sports. And it really is about, especially when you're talking about certain sports like baseball, which was oddly enough, the sport I really hated the most before I had kids. And then once they started playing, I learned to appreciate it. But it's about making strategic moves and knowing when to make or when to have a strategic, I guess, loss, for lack of a better term, when you're going to sacrifice something for the sake of the bigger picture. And that's where where strategy and things come into play. So it's not that it's not that it's just a game, but it's a game of human behavior. And the role of you as a CEO is to use accounting as a strategy to hold yourself accountable for your actions as a leader of the organization. That's really what it's all about, by being able to make sure that you're able to see your numbers and use them as the strategy so that you can build your legacy. So then the question comes, so how do you use accounting actually as a strategy, right? Like most people are running from it. This is usually the time of year when people do their entire accounting for the previous year. And then they say, I'm not going to do this next year. And then what happens? They do it again next year. And it just keeps going and going and going and going and going. So how do you use accounting as an actual strategy? Well, it's strategy plus accountability, and that's what equals your success. So what is a strategy? A series of decisions designated to achieve an overall aim. So if you think about it, we're talking about making sure you're able to hit your key performance indicators. When it comes to accounting and managing your business through your numbers, that's knowing your cash and credit card balances. That's knowing your payables and receivable balances. You know, how much money you owe out and how much is owed to you, in addition to, the amount of sales that you're at. So right now we're on the 26th, and I'm pretty sure at this point most people are looking at their numbers to say, have I met my month-end goal? What do I need to do in these last 5 days of the month to hit my goal if I haven't hit the goal? Or if they've hit the goal, wow, that's awesome, we hit the goal before the month was over. Other key KPIs, number of clients that you have, depending on what your business is, you might need a certain amount, an average amount each month in order to function. So the strategy is making sure that your decisions are lining up to help you reach your key numbers. So then what is accountability? Accountability is an obligation or willingness to accept responsibility or to account for one's actions. There is I'm going to call him a motivational speaker. I'm pretty sure that's limiting him quite a bit. But I was working out with a trainer one time, and he would have him playing in the background as we would all warm up. And there was this one quote this one snippet of one of his presentations that he did, where the question was, are you ready? And his response was, in most situations, we're never ready. Because we're always saying, I'm gonna wait to this, I'm gonna wait to that. And his response, as he said, was, you're never really ready. The question becomes, are you willing? Are you willing to do it? And I actually made that my new mental reminder to say, when someone asks me, are you ready, especially depending on what it is, I might not be ready, but I'm willing. I'm willing to do it. So the obligation or willingness to accept responsibility and or to account for one's actions. So what we're talking about when it comes to accounting is making it a point to pause, making that time to stop and review to see, are your actions leading you towards or away from your goals or objectives? And also let you know, is your strategy working? Are you doing something just to do it because you're used to it? Are you doing something and you want to make sure that it's getting you where you want to go, so that you have the capability and possibility to do some sort of course correction so that you can hit your mark? You might not hit it 100%, but you want to get as close to it as possible. So again, you can modify your strategy if necessary. So what is an accountability system? It's 5 proven steps that help to modify behavior to ensure success. So when I say the modification of behavior, one of the things that in the clients that I've worked with, one of the things that usually happens is there's a period of time where I'm spending with my clients where it's kind of a broad picture, probably kind of sound weird, but it's kind of like a dominatrix type thing. I'm literally whipping my clients into shape, getting them to transition from, oh, I'm just going to use my debit card and I'm going to go pay for to get my nails. I'm going to pay for this that has to happen at my house. I'm going to just use that to do things. And the reality is that that's usually one of the things that becomes detrimental when it comes to being a business owner, especially if you are an entity. The whole purpose of having that entity is to create that separation. But one of the first places that people look when they want to see if you are, in fact, maintaining that separation, or to see if you pierced your corporate veil, part of that comes from the accounting. I mean, your annual minutes, things like that, those can be, created to match up, but your numbers, what you're actually doing on a day-to-day basis, the commingling of your numbers, that of your money, that becomes an obvious, hey, you're not technically acting like a separate entity, and so therefore we're going to roll back all the benefits that you were receiving by being an entity, and we're going to now treat you as a sole proprietor who is making money in this format, which from a tax standpoint, depending on how well your business is doing, not the best thing for you in many situations for a lot of business owners. So this 5 proven steps are what I have noticed in working with my clients over the years that helps us to get them into a position where they're able to modify and change their habits so that they can actually be the actual leaders of their business and organization. So an accountability system will help you navigate the 3 major challenges that most business owners face. One is declining or stagnant revenues. You get to the point where you hit 5, 6, 7 figures on a consistent basis, and then you stop. There's no growth. It just kind of stays in one spot, or worse, it goes backwards, and you're trying to figure out, so what am I supposed to do to move this forward? Well, by having the system, you're able to see when those things happen, so you can make the adjustments as they go, as opposed to waiting till the end of the year and realizing, wow, my business is on life support right now. What is it that I can do to maintain it as well as grow it? The second challenge is unsteady cash flow. Many times when I'm meeting with my one of my clients in the beginning, that's usually one of the pain points, is they know they're making money. There's money coming in. There's also money coming out. They seem to never have the money that they need coming in when it's time for it to go out. And it becomes very, very frustrating and overwhelming and just extremely stressful. I mean, to know that you have the capability of generating the income to cover your expenses. However, the day that the bill is due is the day you don't have that amount of money in your bank account. That is probably one of the most devastating experiences that many of my clients used to experience prior to working with me. And so by being able to utilize the system, we're able to create a steady stream of cash flow, making sure that we have what we need when we need it to cover our bases. And then the third challenge is an unexpected or high tax liabilities. Many business owners are unsure or unclear of how money movement affects their financial reports, and their financial reports are what's going to determine what their their tax liability is going to be for the year. So you go through the year assuming that you're creating business expenses, or that you're using the money that can be written off, because many people say run as much as you can through your business, run as much as your lifestyle as you can through your business. And though you can, there usually needs to be some sort of strategy around that process. So when you don't have a strategy around that process, and you're just assuming as long as I'm paying money out of my business account, then that should count as a business expense, and therefore I should not have a tax liability because I've spent all my money. There's no money in my bank account. Then they come to someone like me, I rerun their numbers, I look at how things are going, I go, yeah, this is your actual tax liability because this is your actual net income. And it's one of those devastating moments, because depending on how long you've been operating in that format, or how much you have made those bad habits and have had those bad habits ingrained into you, now we're looking at sometimes high tax liabilities that feel like they cannot be, you can't come out of them. There's no other side of those, and that usually has the capability of leading to the loss of the business, which no one did all this hard work just to lose it, especially when it's all because there was no actual strategy when it came to the tax liability. Just a little side note on that one. When it comes to, as I said, the unexpected tax liability, I like to tell people, think of your tax liability the same way you would think of a car payment that you would have on a car that you wanted, or the mortgage payment you would have on a mortgage, or the rent payment on a home that you wanted to live in. You prepared yourself to pay that note. You wanted that car, so therefore you were going to pay the note associated with that car, how big or small. You said, I'm going to make sure I pay this note. Same thing when it comes to your home. I'm going to make sure I can pay this each month because this is what I want to do. So when you think about your business and the growth that you wanted to have, just the same way you were proactive and pre-planned when it came to your car note or your mortgage, you can have that same proactiveness and pre-planning when it comes to your taxes. I want my net income to be at this range. Depending on what your entity structure is, that will allow you to say, okay, this is my tax bill for the year. So then you can pre-plan that, or you can put it off to the side so you still have the cash. So you might not be the kind of person who says, I'm going to go ahead and give the government my money, hope they're going to do what's necessary with it, and then at the end of the year, see if I owe them any more, or see if I've overpaid. You might be one of those that goes, no, 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 no. What I'll do is I'll put the money to the side. That way, if I need it, I've got it. I can set up a payment plan with the IRS to pay off whatever balance is left over. But at least I know where the money's going, what's happening, and there it goes. So as I was kind of going back to what I was saying, is you can determine what you want your tax liability to be and then be pleasantly surprised when you qualify for any particular oh my goodness, the credits. Sorry, my brain just had a total lapse. Credits, especially if they're refundable credits. So if you're doing what you have set out to do as a plan, and you're putting yourself in a position to be able to accept or receive or qualify for particular credits, and you're making sure all that goes, then now your tax liability is not unexpected. And more likely, it's probably not that high. Because again, you've planned for it, you've prepared for it, and you put yourself in a position to where you're able to utilize that to help you build and lead and grow your business. Any questions, thoughts, comments on that so far? Because you guys are staring at me, and sometimes that freaks me out when people just
Oh my
stare
gosh,
at me.
this speaking to me. I don't have the unsteady cash flow, so maybe that's good. But all these strategies, and I have a CPA, and I thought that's what he was going to do for me, was help me manage these tax liabilities and stuff. And I don't hear from him, and I just let it go this year. That's on me. But it's like, yeah, I feel like I don't, I thought that's what a CPA was supposed to do and help you with your taxes.
And that's usually the mistake that gets made. When I was getting my degree in accounting and decided I was not going to go the CPA route, as a training, CPAs are trained to be auditors. That's technically what the training is for. And when it comes to taxes, the highest level of tax specialist is the one that is licensed by the IRS, which is an enrolled agent. That means they can operate wherever, and they've been trained and tested by the IRS to be able to prepare taxes. There are CPAs who will go that extra mile and maybe get their master's in taxation, or they'll study taxation to a certain degree. But big picture, unless that is their specialty, they're not used. That's not how they're actually trained and what they're trained for. So the IRS gives CPAs and attorneys a particular level of leeway, because accountants who, again, CPAs are trained to be auditors, they can look at numbers and say, this is where this goes, this is where this goes, and be able to reconcile to your financial reports. And attorneys, well, taxes are laws. So they understand the law, so therefore they're able to support you. However, the old school way of thinking when it comes to CPAs is to treat the business and their clients the same way attorneys do. Bill you for the time that they're actually spending on it, as opposed to creating an advisory type relationship where you feel comfortable calling them when necessary and asking them questions. Like I'll have a client call me, I'm in the T-Mobile store, I really want to upgrade my phone. Is this something that I can run through the business? It's a $300 phone, and I'm not worrying about $300 over the big picture of everything we've got running through your business. I think that's workable. But to know that they have that comfortability, being able to email me that or text me that or call me those kind of questions, that's where things transition. And in all honesty, that's really one of my missions, is to change the accounting industry to lead more over to the advisory service. So when you do have questions, you feel comfortable calling. You're using your accountant as an advisor who's helping you throughout the course of the year and letting you know this is the tax strategies that fit into what you're looking to do, and this is what we need to do in order to be able to qualify for those particular tax strategies.
Yeah, that sounds exactly like what I need. I just felt like I got dumped, by the CPA, but that was perhaps, like you say, my expectation was wrong. I thought that's what they were going to do. And
Yeah, and that's usually what happens. There's an assumption on both sides. From the accounting side, we have an assumption that you know what you're doing when it comes to the numbers, because why not? That's what we were trained for. Of course, everybody knows how to do that. Right? Like when I was learning baseball, I'm like, well, why is he just standing there doing that? And my cousin and fellow team mom, that's not the rule. Well, that doesn't make any sense. Well, you will once you learn the strategy of it. They're like, oh, that's why he's doing that. So kind of thing. But there's an expectation on both sides, and no one's having that mutual conversation to say, how do we prevent the CPAs from being frustrated with the clients? How do we empower our clients to allow us to basically earn our keep and be advisors to you? And it usually comes from not understanding how to break the conversation down to this level that we're talking about right now.
awesome. Keep going.
Yeah, LaVonne, we have a question from Jeff Merriman.
Yes. Hi, Jeff. I thought I saw it up on there. I was trying to move my picture around. Hi, Jeff. You have a question? Uh-oh. Jeff question went away. Jeff, are you there?
We've got another question from Joe Miller.
Sure. Joe.
Thanks, LaVonne. Appreciate your expertise so far. Question for you really quick. You talked a lot about the accountability and helping businesses and business owners establish accountability and strategies. Do you also assist business owners in establishing the priorities that they need to be accountable to?
Yes. It kind of all goes hand in hand. We have to work together to figure out, based off of your overall goals of the business, how do we make this work within it? So I'll have several conversations with my clients when they go, okay, so you're going to see something go through the account, and I'll have a conversation. I'll go, okay, so is that helping us or is that hurting us big picture? Because if you want to be able to have really benefit from having this successful business, then let's use the proper strategies to allow it to compensate you the best way. So it really is about figuring out, as I said before, how do we change some of the habits, the thought processes, the way of thinking, so that you're not thinking as a technician who knows how to make money. You see the money in your bank account. You're thinking as a CEO who's looking at not only what's in the bank account, how much you have in access to capital, how much you have that's coming up in payroll, and what's sitting in your prospecting or quotes amount of money that you need to close deals on, and figuring out how to use all of those with the benefit of time, the calendar, to say, okay, if I can collect this on these days and I can pay this on this day, or I can order this on this day, and now it becomes more of a streamlined process, as opposed to this feeling like you're constantly putting out a fire when it comes to your money and your business all the time.
Thank you. So how do you help those business owners establish the priorities so it's not always, like you said, putting out fires? Is it strictly on time, or are there other barometers that we can use?
There's several barometers. I mean, a big part of it is really just, it's like I said, goes before, what's the overall objective that we're looking to accomplish? That way we know what our parameters are. And then we look at, okay, so what's the general flow of the business? So many times when I work with a client, we'll spend, about a good month or two, especially if it's a long-term contract, we'll spend a good month or two just getting into the flow of how they're naturally responding, so that we can make those adjustments. And just FYI, I just kind of throw out there, I am NLP certified. I realize that there's a thought process that's going in the brains of many of my clients. And sometimes there needs to be some particular tools and strategies to help tweak that a little bit. So as we're looking at what their natural habits are, we're figuring out why are you making that decision that way? And many times there's some sort of poor connection that they have with money, or there's just no connection to money. They just realize, okay, I'm earning it, and so I get to spend it. So it's about figuring out, what are the triggers that cause you to make certain decisions, and then how do we restructure those so that it becomes more of a decision or a response as opposed to reaction? Does that help a little bit? Cool. Cool. Any other questions, comments, or thoughts? I like that you guys are engaging. That makes me feel so happy. Jeff, you
Jeff,
have your hand up.
we see you come back.
So my question is this. I have a company that the license is actually where the money's at. And I was just wondering, would it be in my benefit to cease operations and take at least a year loss on the business before selling the license to help eat up some of those capital gains?
I'm going to put this in a kind of broad because there's a lot of variables in that one. I like to say there's a lot of letters to that math problem. If the objective is to reduce tax liability, then that's probably a good strategy to walk through to figure out what the end results would be, and definitely talk to your tax preparer about a strategy. Many of us have been investing in tax planning softwares that allow us to kind of see big picture, what's happening right now and how things go in. And this is the conversations that I want to empower business owners to have to pick up the phone or shoot an email and say, hey, this is my plan. This is what I'm thinking. Can we see what the impact of this will be, so that, again, it's not one of those unexpected situations. At least you knew, if I knew I had to pay this, then I'll prepare for it. But if it's February 2nd and you realize your tax preparer is telling you, okay, we're thinking that your tax liability is going to be about $30,000, you're going, whoa, wait a minute, what, 30,000? What? Where am I supposed to come up with $30,000, right? But if you knew in advance, hey, we're based off of what your goals are and what we anticipate your net income to be, your tax balance at the end of the year probably $30,000. When you split that up over the course of the year and you start making it a point to put cash aside or make estimated payments, it's now no longer a feeling like you're kind of getting slapped around by the IRS. It's more so, this is what I wanted my business to do. This is the cost of me having my business at that level. And now it's more proactive than it is reactive. So I hope that was enough of an answer for you.
Yes, it was. It was enough to point me where I need to go next to get some
Awesome
knowledge.
Yay! That's always my objective.
Okay.
Okay.
I have a question.
Mhm.
Are you hearing me? Okay.
Yes.
Oh, wonderful. Okay. So I have been in business for almost 40 years. And
Congratulations.
thank you. I'm a sole proprietor of vacation rentals. And when I started, it was with a month at a glance calendar for the year for each of my rentals with a pencil and a paper. And I could write everything I wanted to know about that guest, that it was their anniversary or whatever. And I could send out a bulk email to the previous clients of cabin A and say, we're having a special this winter, come up for storm watching, get a free bottle of champagne or whatever, and do that. I would get birth announcements, wedding announcements, all kinds of things. So it was a relationship. I am still doing that, and I'm tired. And
You're still using paper and stuff? Is that what you're referring to?
I am so embarrassed to tell you. Right. I have, and everything I spend money on is geared toward, is this deductible? And I think that way from day one. I pay my state sales tax every month, and I was so excited to turn over 3 of my house cabins to Airbnb, and they do the bookkeeping, which is huge for somebody like me that doesn't know to do that. Okay, I met with a young woman accountant, and I said, I need to have help because it's overwhelming. My dilemma now is that her brain channels information into digital fingers on a laptop. My brain does not work that way. What kind of person can help me know, instead of getting checks, how do I find a credit card that's less than charging me less than 4% to do that.
Management.
And how do I, so I know what deductible, I know what IRS stuff, I've been audited, and I have somebody that will file my tax returns, but I don't have the skills to do digital stuff.
Well, it's
I get,
definitely a transition process because I'm about 98% paperless in my world.
okay,
Especially and the benefit COVID really made that really allowed me to enhance that a whole lot because dealing with multiple clients and multiple locations, it just became a whole lot easier to say, hey, if we got it all scanned and put into our cloud drive, that way, no matter where I am, if you ask me a question about your stuff,
right.
I can look for it. So it really becomes now looking at and working with your accountant and finding out, okay, so how does this transition look? And that's what I do with my clients as we look at as we start with, okay, can you first start with making sure that you scan your receipts for me, whether you have a scanner or you use, you have an assistant in your office do that, or you use your phone and you upload it to the cloud drive. We start making small shifts to where we can
Okay,
see the benefit of it, because just like in any other, whenever you're
yeah,
making any habit changes, like with weight loss, you want to make sure that, okay, if I'm going to go to intermittent fasting and go, meatless or things like that, you want to be able to have those small wins that allows our brain to see, okay, this isn't as bad as I thought it was. It's not as scary as I thought it
okay.
was. So you
Yes, I
you
have
start looking for
fear.
slowly transitions.
Thank you. That's a great answer because I have fear and I freeze like deer in the headlights.
Yeah. And so, yeah, you
And
want to talk to her and find out, okay, where can we start on this transition to, the digital, to where I'm not scared and, terrified, and you're not mad at me for not making the transition.
so the marketing for this program that you're presenting that I really liked was that you would help something about help us do what we do well and help us know how to compensate for what we don't, which is I have no idea the details of my income.
When we talk a little bit about because we're going to go over the five parts of the system, we're going to talk a little bit about that, and maybe that'll be something that'll help you to see
yes,
where your
okay,
starting point is.
yes, because I do well what I do, but now the financial part is like a burden, and I want to let go of it, and I don't know how.
And that's a big part of the accountability. Many times I'm working with people and that they have that same fear, or that same feeling towards their accounting. It's, it's the devil. I don't want to do it. I don't like it. I'm not a numbers person. And my running joke whenever I hear someone say, I'm not a numbers person, I don't do accounting. And I look at them, I go, you know how to keep a roof over your head, clothes on your
Yeah,
back, and food on your plate? Guess
right,
what? You know how to do accounting. Well, you didn't know how to do, and what our society doesn't teach us, because they teach us to be employees, which means we're going to go somewhere, they're going to tell us how much they're going to pay us, and we're going to create a lifestyle out of that. They don't teach us to be business owners and say, I'm going to target this this income amount, and I'm going to figure out how do I become the business owner who can maintain and manage that and grow that moving forward. And so it's a transition. So I think by looking at the 5-step process, you'll see where you can start making that slowly in each of those steps until you get to a point where now you want it, like you want it to be this easy to access situation, process, to where, oh, that's my numbers, that's what's happening, this is great.
do you take new clients?
Yes, I do. We'll talk about
Okay,
that.
we'll have to talk about that. Thank you.
All right. So let's talk a little bit more about the system. So what does your accountability system, what it does is allows you to organize and audit proof your accounting. That is
Yeah,
probably one of the biggest things. My system was designed from around, well, it got enhanced when I was doing accounting for a nonprofit. It was actually the last W-2 job I had was at this particular nonprofit. And what we found was that there's very specific details that we needed to keep track of. And it was always this rush at the end of the fiscal year, or when it was time to do the monthly budgeting sometimes, where we were scurrying around trying to get all the details, and it was just overwhelming. Once we implemented this system, the auditors who would come to us saying, hey, I'm going to block out 3 days to deal with you, spent like a half a day. Like literally they came in and they left, and I think when we had to, because our budget had gone up to where it was, I think, $1 million in federal funding, and we were required to get an outside audit. The only thing that the outside auditor was able to tell us is, well, we want to see the executive director's signature on the bills that's saying that she's approving them before they get paid. I'm like, so the fact that she allowed me to write the check doesn't count as approval? Like that's the only nitpicky thing you can tell me? You know what? Fine,
Okay.
I'll take it. I'll take it. I'll take it. Right? So it auto-proofs your accounting. It helps you to better understand your business. This might be a bias. I'm an accountant, but accounting is technically the unifier of all industries and all different business models. It's the one way we can put everything into a scoring mechanism. You know, how much are you making? What's your percentage of your gross profits? What's your percentage of your net income? The numbers are the unifier. Think about your tax preparer, how many different types of returns that they come across. A lender, how many types of businesses do they come across? The one way to unify it is through your numbers. And if you can understand your numbers from this 50,000 foot level, that's the transition. That's when you go from a technician who knows how to generate income to a CEO who's running an organization that is generating the income. So it helps you understand.
Say that one more time, slow.
So you go from a technician that knows how to generate income to a CEO who runs the organization that generates the income.
I like that. That's great. Okay. Okay.
So like I said, it helps you understand your business better, and which means it's going to lead to reduced stress. I mean, we all got into business for a purpose, and I'm pretty sure it's not to be up at 2:00 in the morning trying to figure out, how am I going to pay this? How is my staff going to get paid? How is this going to happen? That is not what we got into this for. We got into this because there's something that we thought we could do. There's something we can bring to the market that we feel people could benefit from. And we want to make sure that we can do that to the best of our capability. Well, it's kind of hard to do that when you're stressed out over your money all the time. So when you have this system, when you put it in place, this is one of the benefits that these are three of the main benefits that you get, is that you have the organization and the audit proof. You have a better understanding of what's going on with your business, and you are not overwhelmed, which means you as a CEO get to focus on, okay, so where do I want my business to be 1, 3, 5, 7, 10 years out, and focus on creating the pathway to get there and using your numbers as your scorecard in this game of business to determine, am I playing to win or am I playing just to play? You know, if we use the sports metaphor, again, having the kids, there's the rec ball where you're basically paying to play. There's high school ball where you're getting some kind of benefits for playing, but for the most part, you're still paying to play. Then there's college where you're being compensated for your knowledge of the game. And then there's pro level where you're literally getting paid to play. And you want to make that transition when it comes to your business, the game of business, to go from, okay, you started your business, I'm paying to play. I'm just, everything I earn goes right back into the business. I'm not pulling anything out. It's just doing what it's got to do. And you ease your way up into the point where you're able to say, wow, my business is not only supporting itself, it's supporting me, it's supporting my employees, my community, is doing all of these things that are great, because your brain is now able to focus on the forward action as opposed to what already took place and how that's going to affect you from this point forward. So next is, so what is the accountability system? It's the 5 steps. So it starts with, first we have to identify, what are we tracking? This usually leads to a full understanding of what the chart of accounts or the categories are that you're keeping track of. So as I said before, when I was teaching QuickBooks, when I teach the QuickBooks classes, people were asking all these things that were happening in the background, and a lot of it had nothing to do with the software. It's about understanding what the accounting part, what I learned in school, what's going on. Yes, James. So it's identify. So what are we tracking? How does the chart of accounts need to be set up? Do we know what our assets are, what our liabilities are? Do we understand equity? Do we understand what our actual sales accounts that we're tracking, our cost of goods, our cost of sales, and our operating expenses? Do we have all those things organized and ready for us to take a look at? And then next is to collect that information. As I said before, we start with what can you start to digitize, or where is that information going, and how do we get it into some sort of housed system so that we can go to step 3, which is to analyze it, get it to spit out a report that tells us this is what happens. This is what happened. So what do we want to do with this information? Now that we see it, now we can strategize with that information and say, we're going to focus on increasing sales. We're going to focus on reducing costs. We're going to focus on, putting all of our money into marketing, knowing that we might take a loss this year, but because of the sales cycles that we have, we know next year and the years after, that's going to do nothing but help to catapult us into the next stage. And then it's the implementation of that process. Okay, we have the strategy. How are we keeping track of it? What's happening? And then the meeting, the regular reviewing of the numbers to make sure that your actions, your habits, what you're doing are actually leading you towards your ultimate goal. And what I do, I work with my clients is we literally go through each of these. What are we tracking? How are we collecting it? What does the analysis look like? Do we understand what the reports are telling us? Now that we see what the reports are saying, what's our plan? And then now let's make it a point to have our accountability meetings where we're looking at and seeing what's happening. So that is the foundation of dollars and cents. As I realized, I wanted to make sure people knew what their dollars, what their financials were telling them, that they can make sense out of it, so that they can then now take that information and go lead their businesses, and then leave a legacy for future generations, whether that's to sell their business, to pass it on to family members, whatever that looks like. We want to be able to go through that process, and at the end of your game time, once you're finished playing the game, you can walk away feeling confident and comfortable about it all. So I want to thank you all. I think we're coming up on getting close to the half-hour mark. So I want to make sure there's some time for communication and questions to see how this information has landed for any of you.
Thank you, LaVonne. We did have, I wanted to start us out with one question from John Goldstone.
Hi, LaVonne. Yeah, my question is really a financing question, and it's sort of specific to the business, but it seems like, but it is a bit of a strategic question. So that's actually part of the reason to listen to you is why I plugged in here. So let's see, I'll try and keep the background short, but I think that these are things that you may need to know. So we are a C Corp. We do have half a dozen shareholders or so, including like the University of Washington and a publicly traded company. We are working, we're doing chemistry and work for the National Science Foundation, NSF, and the Department of Defense, specifically the Army. Our problem is, back on your other slide, is unsteady cash flow. Last year we had 3 contracts, 2 with DoD and 1 with NSF. And then those have gone down to 0 as of today, but we've got 2 letters that we're getting a phase 2 for Army. And so, don't exactly want to lay off the chemists, full-time chemists that we have, right? Still, right. I'm sure he still wants to get paid. And I was glad to hear that you'd done some work with federal funding. So the question is really one of a loan from the shareholders to the corporation. Now, we've drafted a document, and I've sent it to the attorney to have the attorney review that. And I know that we could potentially go to a bank and ask for either an unsecured loan, or potentially we could ask for a secured loan. But my question is really one to you. I know as they look at, before you get the phase 2 money, sometimes they'll take a look at your books and say, okay, well, what are you doing here? Is this corporation for real? And not only that, but, can you manage the money that you have? We have Clark Nuber as our sort of federal tax. No, I shouldn't, actually not tax, federal contracts
Mhm.
CPA, and then we also have another tax accountant who takes care of that. But the question is a corporate, and a couple of us are willing to loan the corporation money at prime interest rate. How is that looked on versus going to a bank and having, the bank wants to charge fees, which is going to be more, and it's going to be like prime plus 3 to 6. So, not thrilled about paying more money.
Yeah, there's a catch on both sides, because there's two ways of looking at that. You see that you've got a governing board that literally is putting their money where their mouth is. They're buying in. So depending on it, kind of goes with the perspective of the person who, who's reviewing it. Hey, we know we've got the board and they are just as committed. That could be a benefit. Getting a loan, yeah, that's also great, because now, the worst case scenario, your board, that money that was going to be contributed from the board can kind of sit in the background as a worst case scenario. We can always come back to you for that. What I learned with what we found with the nonprofit where this, like I said, the system kind of was birthed, was it wasn't so much of a loan that we were looking for. We were looking for the line of credit, because our grants were the refundable grants. So we had to spend the money and then request for the money to come back. And especially in the beginning stages of it, there's a lot of money that goes out. So there was two parts, one, making sure our vendors understood you're dealing with an organization that's funded by government grants, which means if we put one period in the wrong spot, we go from a net 40, net 30 to a net 45, a net 60 real fast, which puts you, getting paid a little bit later. So one of our biggest things that we did is we looked at a line of credit that allowed us to use what we needed as far as cash flow. That way we weren't committing ourselves to a regular payment for a consistent period of time. And we also were able to control what our interest rates and things were. So we were able to use that, get going, got the reimbursements for our grants. And then we were actually able to pay that line of credit off within the matter of like 3 months, because we were able to get the flow going, which gave us, again, our executive director, the ability to now focus on the next type of grants we can go after. So that's usually where I like to sit with people on, is to see, do we want to commit to a consistent payment amount? And if so, then okay, we'll run that through the numbers and see how that looks for management purposes. Or do we want to look to see about getting access to lines of credit, large balance credit cards that allow us to function? We still want to be discerning as far as what we're paying. If someone's going to give us net 30, let's take net 30. Let's go, to day 29 and make that payment, just so we can stretch our cash out as much as possible. But if we can't see it all, it's kind of hard. So we feel like because a bill came in, we have to pay it right now. No, we don't. There's a due date on there, and we get to utilize that. Or if it is one we have to pay right now, we'll pay that and we'll hold off. Where my office space is, they want their rent check no later than the 5th. Sprint, on the other hand, well, now T-Mobile, they're going to give me a little leeway on when they're going to expect that bill to be paid. So when you're able to organize the information and see who's priority, who is in, and who, hey, you're going to get it when you get it, based off of how things operate. Again, that gives you a sense of empowerment and knowing, okay, so we can make sure our account balances stay here, so that in the worst case scenario, we have salary, we have operating expenses. And that's what we did when we were able to get everything organized with this particular nonprofit. We said, because as I said, that was the last W-2 job I had, and paying bills, payroll, those were always these stickler points for our executive director, because I was like, we don't have cash, we don't have it. So we would make sure that we kept our cash balances able to be able to, at bare minimum, pay 2 months of payroll. That was our comfort zone. So you find out what's your comfort zone and how do we work our way to that, which means it's going to be some times where certain things won't get paid this month, but we'll work it within looking at the calendar and what our leeway is. And then once you get around a couple cycles of that, now you realize you're ahead of the game. I hope that kind of helped out a little bit.
Yeah. So let me just clarify a little bit. So, as board members, I guess, or as owners of the company, right? Because it's owners that have at least 10% stake who are willing to loan the corporation money. You're hitting the nail on the head on one point, which is, like there's a $38,000 piece of equipment that normally you'd fund over the course of the time, but in the contract that we have, or at least the proposal that we have forward, they will reimburse us for costs, including that. So we can basically buy the piece of equipment and then say, okay, here it is.
Pay it off, yeah.
and they'll pay it. Line of credit we're on top of. So as corporate owners, we're willing to extend the corporation a line of credit. My main part of the question is this, and maybe you've already answered it, is as owners extending the corporation a line of credit versus going to the bank, is there a problem either way? Does it, and either
No,
way,
it's all gonna be about the documentation that you have, as long as, again, it's an entity. So as long as you guys have it documented that it was approved by the board, you went through and made sure it wasn't hitting any of your conflict of interest policies, that's great. Because like I said, from the outside looking in, you see, hey, the board is willing to put their money where their mouth is. They believe in this. So if they believe in it, then now that's gonna change how an outside party might view it. So yeah, as long as you've covered all your bases from the, the corporate level as far as documentation, now it's just a question of which is the best way that we want to run this, so that we can, again, this is the strategy. We're going to go with this strategy, and we're going to monitor it to see, did it work? And if it worked, then now we know we have a system that we can come back to if we end up in this bind where we're in between, contract signed and first payment, but services have to be made. Now we can know, let's go back to this formula, change out what's changed in this one, and then duplicate it so that we can move forward.
okay. Thank you very much. Yeah, I think you hit it.
Thank you.
Okay.
Awesome. Any other questions, comments, or thoughts?
Yeah, Joe Miller has his hand up.
Yes, Joe.
Hey, I appreciate your casual and informative presentation. I appreciate you and how you've presented today. Well done.
Thank you.
I know you probably run into, let's call it frustrations with micro business owners not being able to simply read a P&L statement, let alone being able to knowing how to calculate their LTVs and their cost of acquisition, customer acquisition costs and their cost of goods sold. How much time do you spend explaining this? And I mean, how patient do you have to be, I guess, and how do you go about doing it? Because not everybody can receive that information.
Yeah, that goes into a couple different things. In the beginning, one of the things that I look at before I take on a client is to figure out, are they coachable? Are they so set in their ways to where they're gonna be? There's no other way to kind of get through them. And in many situations, when I'm working with a client, I ask the question up front, especially when we're doing our initial accountability call, is what's the most frustrating thing about what's going on, and what do you want to, what's your overall objective when it comes to your accounting? If there's no answer to those, and that means I know that they're not really ready for that CEO position. And that's when I refer to them to other workshops, things to where they can kind of start to make that mind shift, because it all starts here. It starts here. Once you realize that, okay, this is my corporation. Yes, I might be the sole owner of it and I'm managing everything, but it's still a separate entity. It's not me. So once you realize that there's a separation, then you start to look at it a little bit differently. You are now responsible for this organization maintaining itself financially. So when you can remove yourself from it, then that usually makes that transition. So it really is about, one, making sure they're even ready for the mental shift. And if they are ready for the mental shift, it goes back to working that 5-step program is, so do you know what it is that we're tracking? Do you have clear understanding of what the chart of accounts is? And in some trainings that I do, I actually break it down. This is an example of the type of categories you're going to have in a profit and loss statement. These are the type of categories you're going to have on a balance sheet. So that way, when you're making a decision, you know exactly which of these reports are going to be affected, and you can determine, okay, is that something I'm okay with being affected, or is that not how I want it to be affected? So once we get past the, hey, you and your business are separate, and they're two different things, and you're looking at it as you would like a child, something that you need to nourish and take care of and be protective of, that usually is where the transition takes place. But sometimes there's those who they're not ready to make that separation. I had one client where, it was every time we talked, like, but this is my money. It's like, it's technically not your money. Yes, you earned it, but this is a whole separate entity who has asked you to be responsible enough to make sure that it's there. And if they're not willing to make that separation, then usually it's a little bit difficult. But if they get it, then it's just a matter of having the patience and going through, like I said, the system of analyzing, seeing what's happening, creating the strategy and implementing it, and then reviewing it, and going on a constant cycle to make sure we have everything in a position to where they can see the benefit of it. If that makes sense.
So just as a follow-up then, obviously there's people who own a job and there's people who own a business. And like you said, technicians have difficulty oftentimes transitioning between those. when do you find, just on a personal note, how do you find that it's like, okay, this is a person who can't get out of I own a job mentality and become a business owner?
I usually find it, very interesting that you put that together. Is as I was getting my NLP certification, and I realized, okay, so I'm actually a business coach, and what I realized is instead of just jumping into a marriage with a client, I do a 90-day kind of period of time, because it takes about that amount of time for a full shift to come into place. It takes the first 10 days to get past the anger part of it, like this is so uncomfortable, I can't deal with it. The next 10 days is usually about, okay, so now I've learned how this system works. I think I'm getting it. And then the next 10 days is when you're starting to see some of the benefits of the hard work or the sacrifices that you're making. And then we need to go through that cycle two more times to be able to make sure that everything works. And usually by the time I get to, week 6, week 7 is when I realize, okay, yeah, you're just not gonna make that change. And I don't want to spend every meeting yelling at you or being disappointed in you, because if you're working with me, I want you to be great. And that's my job. My job is to help you be great. I'm your first line of defense financially from everything out there. If I don't buy it, then, and I care, imagine the person who is assuming that you're fraudulent or that you have no idea what's going on with your numbers. And depending on who that person is, that could have a major effect on your your long-term goals for your business. So it takes about 6 weeks or so for me to see if someone's really ready to push through. And then at that point is when we have the ability to kind of part ways and go from there. Did that kind of help a little bit?
Yeah, thanks. I was just curious about what your input, because obviously you're going to see people that it's like, I need you not be involved in your lack of transition. So thank you.
What I've been blessed in is I've been able to come across people who know that they have a fear of the numbers. However, they also know that getting on the other side of that fear is where their greatness is going to come from. So I've been blessed where I've had more clients than that, than the ones that are like, well, hey, I just want to kind of do it my way, and I just want to kind of pay you to do stuff. And I'm like, well, that sounds like an employee, and I'm a horrible employee. I'm not good employee. We tried it. It doesn't work. So working my own business is it's the best thing for me and everyone involved. So, if you can't respect me as the advisor that I'm meant to be, then obviously this isn't a relationship that's going to work. So yeah, it's really about, being able to see. And like I said, I've been blessed to have to work with people who they get it. They understand that as much as they are afraid of it, making that transition is the only way their business is going to be able to thrive and survive. Cool. So I left the slide up that has my contact information. Please feel free to call, email, or visit my website to see if there's any information else that could benefit you. I am honored for the opportunity to have been here to speak to amazing business owners like yourselves. And if you have any questions, please feel free to reach out. I would love to be able to support you in any way, in any capacity that I can.
Thank you so much, LaVonne, for coming on tonight.
Thank
a lot
you.
of really great, useful information, and I really appreciate the engagement and the time that you took with each of the attendees here today. The ScaleUp Mastermind will continue on. It will have our next one coming up here in February. Please also look forward to, if you need to watch this again, it'll be on our YouTube channel. You can find our YouTube channel at the Thurston EDC-Center for Business and Innovation. I will look forward to seeing you guys next week, and or not next week, next month. and I thank you all for coming. Have a great rest of the month.
Thanks. I appreciate being invited. I hope you guys